Good evening, everyone. This is James Gardino coming to you for Dividend Stock Talk, where we talk about dividend stocks for our weekly and monthly cash flow. It is 11:30, Wednesday, August 30th. Oh, wonderful. So that's what we are up to. Give me 1 second. I got an echo going on back here, so I have to get rid of that echo. There we go. That's better. Get rid of that echo. And let's go where we're going. All right, as I was saying, Dividend Stock Talk, where we talk about dividend stocks for monthly cash flow and weekly cash flow. And today we're just going to go over a few of the weekly options that we have coming this week. Today's Wednesday, so we have Thursday, Friday, so we have 2 more days for this week, and see if you can find any trades to do for tomorrow or Friday and make a little bit of money. Where am I and what am I doing? All right, slide that back over here where I'm used to it being. All right, we already looked at HOG, which is Harley Davidson. We already looked at them. And let's see what Harley Davidson. Harley Davidson went up. We talked about them the other day. So had you done it, she's doing right what we thought she was going to do. Okay, let's get out of that. And next we had HPQ, HPE, Fox, and APC. We didn't look at APC because it wasn't enough money. Now we did look at Hewlett Packard, even though it wasn't enough money, we looked at it anyway. Today there's basically only one company to look at. We have 11 for tomorrow, so we're going to look at this one today, and we're also going to look at this 11. Because we only have tomorrow, because there's really nothing worth doing on Friday. But we'll look at those 2 days. So let's quickly take a look at NEM, see what they're doing. NEM, and your little dog, too. All right, NEM is Newmont. I don't even know what Newmont does. All right, I got to change this and go back to... because I reset my charts to be 10 years. So this is a 10-year chart that we're looking at, not the 1-year chart. So if I can go back, oh, 1 year, 1 day. Here we go. All right, Newmont. Newmont starts out the year at 38, goes sideways for about a month and a half. And during that month and a half, it makes a high of 42, but quickly settles back down to the 38 area. She then proceeds to drop in the next couple of months to a 32 to 35 area. And she trades for the rest of the year that way. Toward the last few weeks, we have seen it settle back down, and she is going sideways for a few weeks. And the last 2 days brings us right to where it is today at 38.06. Now, it's at 38.06 now, and it does have a tendency to look like it's going up from where it is. But let's quickly take a look at the seasonality, see what it might be doing in the next few weeks. Okay, here we are right now, and we want to just isolate this little area right there. Okay, here's where we are now. So we have tomorrow and Friday. Okay, so is this thing worth getting into tomorrow and then getting out Friday? It looks like it could be, because tomorrow looks like she'd open up and then she's going to dip and then jump on Friday, which is it's just good. Don't get me wrong, that's not what it's going to do. It's what it looks like it does based on historical patterns. So this is 1 year on top of another on top of another. But a collection of the 10 years. So they take the last 10 years and they average them all out, and this is what the movement was. As you can see, she has a tendency to go sideways for a little bit, drop down, go sideways again, and then drop back down towards the end of the year. Now we're in this little section right here, which is the tail end of the third quarter. A couple of days is going to be September. Then when September is over, that's the end of the third quarter. Then we have just the fourth quarter left. to, and the fourth quarter is usually the best for most stocks, most retail stocks. All right, so that being said, let's see what NEM has in store for us. So let's go back to our standard chart, hit trade, and we're just waiting for the computer to catch up. Here we go. Oh, lovely. All right, NEM's already in there. Let's get rid of that. We want to look at tomorrow is Thursday, so we have Thursday and Friday, and that's it. And this is the position that we're looking at right now. 3806. That would be the 37.5, 38, which is this one right here. Ooh, now that looks very favorable. Okay, as if we look at the company, if it's going to go sideways and up a little bit, then this is a good position to get into. This position here, it's only worth 5 cents. And 5 cents, it's about a little bit less than 10%. But 10% for 2 or 3 days is not that, 2 days, sorry. 10% for 2 days is not bad. But would you prefer 30 or 40% for 2 days? That's what I would. But you're closer to the money, which means the closer to the money you get, the higher percentage return you get, the more risk there's going to be. So if we quickly take a look at what is our return, we're going to invest 356, and we're going to get a return of 160. Okay, that is pretty darn close to a 50%. 50% would be 170, I believe. Anyway, ow, damn it. I broke my wrist a while ago and it doesn't healed quite right. Back to what we were saying. Oh, so the all right, for 10 contracts, this position right here, where you buy the 10 verticals, the NEM 100 weeklies, 1 September, which is the first week of September. It's just September 1st. You're buying the 37.5, 38 calls, or around 34 cents. That's going to give you a return of somewhere around between 45 and 50% return for 2 days. That's if and only if the stock stays above 38. Now, the way the chart is reading, this thing should be going, sideways tomorrow and the next day. Should be, if it doesn't really mean it. Could it continue to go up? Yeah, well, we had a high of the year way back here, which was in the 40s, and all the way up to almost 43. So there's a good possibility that this thing can stay above 38 for the next 2 days. And if it does, you're going to make almost 50% return if the stock goes up, stays the same, or even come down just a little bit. So that being said, this one does look like a good trade. And if you didn't want to do this one, let's say you don't want to do this, like get out of here, and let's go to the one further up, which would be a 37.5, which would mean the stock would have to stay above $37.50, which is a nice little bit of a movement. And you never know, it could drop that low, and it may not. But what you're getting is you're only getting a very small return. Okay, you're getting $50 for every 466 you put up. Okay, that's including your commissions. Okay, so that is a little bit more than 12%. 12% is not bad for 2 days. Something you might want to think about. Your break even would be 37.45. So that's a nice little bit of a distance for this thing to drop just to stay in that area. Okay, so 12, between 12% and 15% for 2 days. That's not bad. So Newmont looks like a good. So you get two possibilities. You get 12% for the 37, 37 and a half, and you get close to 50%, which are around 45, 46% for the 37 and a half, 38 spread. So it's going to be up to you. You know, take the trade, don't take the trade, one or the other. You know, but just remember, the higher risk, higher reward. So the more money that you're going to get in return, like that 45% return for 2 days, that's a lot of money for an investment. Okay, it's make it or break it. It's 45% for 2 days. You don't like that one, be a little bit more reserved and make the 12% for 2 days. It's up to you. Anyway, that being said, let's go back and see who else we're looking at. NEM looked good, so let's take these next ones. All right, we're going to skip the first three, and we're going to look at Altria, Gillen Sciences, Garmin, Merck, Macy's, EIG, which is a big insurance company, Viacom, and Bed Bath and Beyond. Okay, so Bed Bath and Beyond. Here we go. What do you guys got for me? Okay, BBY starts around 45, 46. Drops just a little bit, trades for a month at 42, drops 39, trades for about a month there, then jumps right back up to the 45 and trades for a month and a half. Drops back down to the 40, 41. Trades for 2 months, goes down, trades for ooh. Never fails. Every time I turn the video camera on. All right. Oh, right around March, she makes it right on 38. She slowly declines with a little bit of a drop at 34, right down to 30. And now we're at 27, 28, and she's going sideways. For the last week and a half, she's been going up, right? See, from here on the upside. So she's at 27.87 now. Now there's only one trade worthy of looking at. 27.87 for BBY. All right. Bed Bath and Beyond, we're looking at the 27.50s right here. That's not even worth looking at. Yeah. See, the prices are so askew after hours because the market maker puts them so far out that the numbers just don't make sense. So the only way to figure out if this is going to be a good trade or not is to actually do it during trading hours. That way you get to look at it. Because apparently the market maker didn't want you seeing it. Now Viacom, VIAB, Viacom, starts out the year at 40, almost 41, quickly settles into a trading range between 35 and 38, goes sideways for, let's say about 4 months, jumps on up to make a high of 46.68. Oh, it doesn't stay up there long, comes back down, and there's like a big drop from 42 down to 35.36, and she's been at 35.36 for 3 months, dropped down, and now she's in the 29.30 area, going sideways with a little bit of an uptrend. All right, so let's take a look at what the trade on Viacom looks like. VIAB. All right, so VIAB is a 29. Here we go. This is another one that's so off skew you can't really tell. See, the bid is 10 cents and the ask is 60 cents. It last traded around 37. Now at 37, that's a good deal because where she's at now, we don't know if she's in an uptrend, sideways. It looks like she's going sideways, you know. You got 6 or 7 days down, 5 days up, 3 days down. There's no real evident pattern there, so you really can't tell there. Let's drop this back a little bit and see what we got. Okay. The last 30 days, this thing has dropped. And apparently, there's a lot of volume on this big gap down. I don't know, people jumping out or people getting in saying, hey, this company's way much more than 30 bucks. So let's go buy some. So your volume almost quadrupled. Now your volume today and yesterday, well, for the last few days, is back to normal. I mean, it's back to right around average. Okay, the thing's gone up and sideways. She actually made the low of the year right here, 27.88 or 27.86. That's the low of the year, and maybe she's bouncing off the low of the year and picking up. I don't know. I couldn't tell you. Okay, you can go and do a little bit more research, but let's see what Viacom is offering. Okay, 37 on this. And if you go in one, less risk, absolutely no reward. I don't want to buy something for 49 cents and sell it for 50 cents. This is the only logical one here. It's 28.5, 29. She's at 29 now, so you're going to make it. You're going to make that nice return with up, sideways, or down just a little bit. Give you a nice return of 130 off of 360. Well, 50% return would be 193, 193. So you're off a little bit. So you're looking at what, 40% maybe, 38, between 38 and 40%. That's right off the top of my head. You know, not exact numbers, but pretty close. Okay, so you can make a 38 or 40% return for 2 days with Viacom. Okay, that works for me. Next, we're going to look at really quick AIG. AIG, it's all over the place, aren't they? They start the year off at 59, 60, drop down to 57, which is close to the low of the year. And slowly, over the next 4 months, comes to the high of the year, 67. So you're going sideways at 66 for like 3 or 4 months. Slowly comes back down to a 58, then back up 67, and now here we are back down at 60. Could you be heading back to the 58 area, or even testing out this bottom here at 57? I don't know. It could be one or the other. Let's quickly check this. The last 5 years. Okay, see, this chart right here for the last 5 years, this thing's going sideways. Okay, and you have a low way down here, which it may or may not be coming after. See right here, where she's dropping down? She may be coming down here to test out these bottoms here. You got a, bottom here, here, and here. Hey, maybe they want to come down a little bit further than the 57. I don't know. Okay, that's Viacom. Now let's look at AIG. Oh, that was AIG. Oh, silly me. Okay, so AIG's at 60. Now let's see what they're offering money-wise, because it all comes down to the money. Hey, is AIG going to be a good investment for me for the next couple of days for me to get some kind of a cash return? Simple enough, right? Okay, she's at 60.20, so that'd be the 59.5, 60, which is 39 cents, which is a good deal. Well, let's take a look at the seasonality on this and see if it actually has any seasonality to it. And if so, what kind? Okay, here's where we are. This thing's going to go sideways. See that? Right where we are now? A tiny bit of a dip. Now, how much is a tiny dip? Is that enough to get it out of the money where it is now? Because with this one here, 59, 59.60. Your break even is going to be around 59, 10, something like that. So is that going to drop right here? Is that going to drop below the 59.10 if you get into this position? Now, I'm not sure if you can do the one up. Let's see what that one looks like. Okay, that's not worth it. 2 cents? No, ain't worth it. This one right here be a nice little return for you. The next one to look at, Macy's. I got a lot of Macy's stock that's ain't doing me any good whatsoever. And she's in a downtrend. See that? That's not slight down, my friends. That's just down. Well, all right with that one. All right, so that one's not going to work for us because I don't want to be chasing that. Merck, that big pharmaceutical company. MRK. Yeah, it's a pharmaceutical company, if that's what you're into. Let's take a look at what they look like for the next tidbit of days. Now, that is like a classic going sideways. You get in and out, and you make your profit in about a week or so. So let's take a look at what Merck looks like on the regular chart for the year. Okay, she starts out at 51, almost at 52. Drops down. This right here looks like a double bottom at 48. Bounces off 48. Hits 55 a couple of weeks later. Drops back down to 47. Then bounces up. So she hits about 63. Goes sideways for about 2.5 months. Spikes on up to a little bit less than 67. From there, she drops down to a trading range of 63. It's gone sideways for the last 2 months. So let's see what kind of trades. Oh, wait. Before we do the trades, let's see what the seasonality looks like. If it's even worth us. Yeah, it is. We already said it was. Mark, going sideways. That's a classic going sideways. Can't mistake that for anything else. Okay, let's see what Merck has to offer. Cash-wise, that is, we invest, and we want to find out, is it worth our time and effort? All right, so here's Merck, and it's at 63, so we're going to look at the 55.5, 63. 55, 62.5, 63, yeah, that's more like it. All right, 38 cents, and a nice little return. Yeah, that would work as long as the stock stayed above 63. She should be good to go. So the stock could go up, could go sideways, and even down a little bit, in position all 3 times to make a nice little profit on Merck. So who's after Merck? Garmin, G-R-M-N. G-R-M-N. Garmin. All right, Garmin seasonalities here. She's basically following it almost to a T. That's pretty cool. All right, this one's going sideways with a little tiny bit of a downtrend. So she's going to have to come up really strong with the amount of money being offered and what the seasonality chart looks like. The 1-year chart. Ooh, that looks good. She starts out at the year 36. Bottoms out 31. From 31, she shoots up, goes sideways for about a month in the 36 area, jumps up to 41, travels 2 months in that area, then jumps up for the high of the year at 56, 60, and then quickly drops down $50 area. It's where she is now. Now this is definite sideways pattern. You got your lows down here giving us some support, and you have your highs. Look at this. High there, here, and here. 4, 5 highs it's hitting the 52.87 area. But you definitely have support way down here in the 50, 51 space. Okay, so let's take a look and see what Garmin is offering. GRMN. All right, so Garmin is right where she is now, and we're looking at the 51.50s right there. 42, that's going to be right around 10% or lower. So if you want to chase that, have at it. It's not even worth going into the higher ones because that's even less money. And the at the money ones, which is the 51.5, 52, which she's only halfway into the money there. She's going to have to go above 52 in order to be in the money. And that, my friends, is doable. Anything, almost anything is doable in the stock market. It's just you have to pay the premium to do so. Now this, you're only paying 25 cents. So you can get a return of 60 to 80% just by being in the right position. If you take this position here, and the stock actually goes up that very small amount, 17 cents, or is it 28 cents? 28 cents, that would be above the 52 mark, which you need to make in order to not have to buy all those stocks, just to collect the premiums on that. Okay, we've been here for about an hour. Let me quickly check, see if we have any questions. If so, no question. Yes. All right, so we got no questions tonight. So I'm going to quickly give a closing note that some of these trades you've seen aren't it's not an advertisement or some kind of any tip or whatever for you to do it. I'm just showing you possibilities. Whether or not you do it, that's totally up to you. You have to make your own decisions with your own money. Now, that being said, this is James from the 10-Minute Trader and Dividend Stock Talk, where we like to talk about dividend stocks, monthly and weekly cash flow. I will check you out the next show, which, my friends, is tomorrow night.